Good morning, everyone. I'm Angela Giroux, publisher of the Bauman Letter. We are back with another installment of Your Money Matters. Clint Lee is taking a well-deserved break today. With me today is Ted Bauman, editor of the Bauman Letter. Good morning, Ted.
Hi, Angela. How are you doing?
I'm doing okay. I'm doing better in the markets today. Again, as a reminder for everybody watching, we record these on Friday. So there's no telling where the markets are right now. But as of the moment that we are recording, it's not a nice day. The Dow is down over 500 points. Everything else is down as well. So Ted, we're seeing all kinds of volatility lately. What is going on?
Well, first of all, I want to apologize for the state of my background. My wife is a teacher. She's off work at the moment and decided that I had to paint my office. So she's in the middle of doing that. So sorry about the mess. What's going on in the markets? The markets are reacting, I think, exactly as I predicted they would. They are sentiment driven. They have been sentiment driven since the beginning of the year and maybe even long before that. But I think what's happening is that there's been a slew of bad news. We've made negative projections in the past about what's going to happen.
And we've taken a lot of heat for it.
And we've taken the heat for it. I don't want to see them come true, but
right.
It is what it is. And I think what we're seeing is that there's fears about the virus. There's fears that as we predicted, this would not be an easy recovery. We cannot go back to normal. So basically, I think the slew of bad news has pushed the market in a downward direction. There are some other things going on. There are continuing bankruptcies. I learned this morning that Chuck E. Cheese, who I'm sure is beloved in your household, is going bankrupt. So when that happens, I mean, that's pretty much the end of the American era, isn't it? No Chuck E. Cheese. So anyway, but I think, yeah, it's a bad week, and I think we're going to continue to see this, and precisely because a lot of people have been betting that things would be better. Those bets are being proven wrong, so we're seeing the downward movement. But I want to show a couple of charts because I think there's a pattern here that maybe a lot of people are missing, and I wonder whether or not it doesn't help to explain things. The first chart shows volatility. This is the VIX, and basically it's a measure of options trading. And what the VIX tells you is that there will be a change in the direction of the market coming up based on options activity. It doesn't tell you which direction it will be, but it tells you that something's coming. Now, as you can see, it spiked big time earlier this year. Right now, it's a little bit over 35. Clint Lee has identified 35 to 40 as a danger range. But what I want to bring to your attention is how far above previous spikes in volatility we actually are. If you go back to early 2019 or the end of 2018, early 2019, that January, February spike that we saw in February the 2018, we're actually significantly above those levels even now. So there is no room for complacency when it comes to pure volatility. Now I want to show you a second chart that looks at the S&P 500 since the beginning of the year. And what we see is the 50-day simple moving average was headed towards recrossing the 200, which would have been a very bullish signal, but it's bouncing back below that. But what I want to bring your attention to is to the indicators below. The relative strength index, the money flows, and most importantly, the stochastics are telling us that this is a full-throated pullback. In other words, it's not a temporary blip relevant or relative to previous weeks. It's the result of accumulated movements in volume and pricing that are starting to reveal themselves at a downward thing. Now, the last one I want to show you is a chart that shows the S&P 500 over a 2-year period. And I think there's a pattern there. And if you look back at sort of mid to late last year, we saw the S&P bounce off of the 3,000 level twice, pretty solidly. Then in November, it started its upward march and peaked again in late January, February, just like it did in 2018. And then, of course, the coronavirus panic. But look what's happened. We saw it try to retest or try to get above 3,000, and it's heading back to 3,000. So my take is that the market, even without the coronavirus, wants to be at around 3,000, around that level. It doesn't want to be above that level. Now, So part of what we're seeing, I think, is that there are, irrespective of the virus, there are pressures, long-term pressures that are keeping the market where it is. And in that environment, you shouldn't expect stocks to keep going up. They've probably reached where they want to be, and they're probably higher than they should be given the virus. But if stocks can't go up, then stock picking becomes really important. You have to be able to distinguish between ones that are going to go up and ones that are going to go down. So you can't just rely on Dave Portnoy's thing of stocks only go up. They certainly aren't today. So that's my take. I think we are kind of hitting a mega resistance level, and it's unlikely that we're going to break through it, particularly given the circumstances.
So once again, it doesn't make sense to sit on the sidelines.
No.
I don't think that it ever does. You never know what the market's going to do. But we do have this environment where we saw this huge crash followed by this enormous rally. So how does the average investor manage this volatility?
Well, I mean, I think, depends on what the average investor is into. I mean, if you're into options trading, obviously, then you can start trying to play puts and calls, and look at specific stocks and see which way they're going.
Let's just say straight stock trading. How do we do that?
Stock trading.
Yeah.
Stock trading, I think here's the key thing, and this is what we're telling people. We just had a couple of triple-digit gains in the Bauman portfolio where we're up by 100%, so we've doubled our money. One is over the course of about a year, the other is over the course of about 3.5 months. And what we've told our subscribers is that this is a time to take profits. And some people write back to me and say, well, I don't want to take profits, I want to let it run. And I think right now that's the mistake. And I think everybody should be applying this particular strategy. So I want to show you a table that describes the strategy. So let's just say a hypothetical stock, you bought 100 shares, doesn't matter when you bought them at $22. So your cost basis was $2,200. Let's say now they're at $45, you've made a gain of $2,300. So if you sell 50 of those shares right now, you're back to a position whose value is a little bit above what your original cost basis was. So you've taken profits of a little bit less than 50%, but pretty close. Now, here's what you can do. Let's say that the stock then declines from that 45 level because of maybe the pandemic picks up again and it gets back to the price of $30 a share. Now, you can take the $22,000 or $22.50 that you earn by selling those shares and buy 75 of them at that price. Your cost basis obviously is $2,250. Now let's say it gets back to where it was, it gets back to 45. You've made another gain of $1,125. You now have a combined position of $3,375, and your excess gain by having sold those shares, waited and bought them again at a low and have them come back is 50%. So you've made 50% more than you would if you just bought and held. So my advice and what I'm telling my readers is that now is a good idea to take some money off the table, put it into your pocket, just leave it in cash, and then wait for stocks to decline, and then buy the ones that have legs, the ones that are not just speculative, the ones that have demonstrated previous highs, good previous highs based on fundamentals, and buy them at that new low point, and you're going to make a lot more money. So that's basically the strategy right now. I think the critical question, of course, is knowing which stocks to buy based on those fundamentals. And again, that's what we do at the Bauman Letter and our Alpha Stock Alert specialized trading service. We look for stocks that, even if they pull back, they're going to recover because of their role in the economy and their role in people's lives. They're not going to go anywhere. Mm-hmm. We're not talking airlines, hotels, or casinos. We're talking about things that are literally indispensable no matter what the situation is in the broader world. So that's what we're doing.
I just want to go back to that table real quick.
Sure.
Because I think I know it's difficult for investors to take profits. It's psychologically difficult. What if it goes up? What if it goes higher? But what you're showing here is that you can actually make more money by doing it this way. And I think people don't realize that. They think, I'm taking this money off the table. That's money I could have kept in my positions. It's more money I could have made. Mm-hmm. When actually you're showing here that the opposite can be true. You can maximize your gains. Well,
absolutely. But then a lot depends on understanding where the stock is likely to go from the time where you take profits. If a stock is on a steady upswing, if it's just broken through a resistance level, and it's still going up, you don't want to do it then, because
Right.
then you are going to lose. The thing to do is to take money off the table when a stock enters consolidation. And typically what happens is that a stock will break through a resistance level, it'll hit a new resistance level, and then it'll consolidate, trade sideways for a while. That's when you want to take profits. Particularly for stocks that show a lot of volatility because of perceived sensitivity to COVID. Some of these stocks will decline again, I believe, even though their long-term prospects are excellent. Particularly stocks that are involved in things like the backbone of communications technology and internet. People might get scared, they might want to sell, some of them will go down, but that's when this strategy works, because they're going to bounce back. These are companies we can't live without. So lesson number one, don't sell them when they're on an upswing. Number two, sell them when they are in a downswing, or rather a consolidation. If they start to decline after you've sold them, then that's fine. You've done the right thing, but then wait for the bottom and wait for it to bounce back up. And that's the way to make that extra 50% gain potentially.
And that's another benefit, actually, of the Bauman letter that I would like to point out is you're not just giving people stock picks and saying, here, good luck with this. You're the one taking a look at the charts. You're seeing this consolidation period is saying, and you send out an email and you say, hey guys, let's take profits. Let's keep this money in our pockets and let's buy back when the time is right.
Yeah, no, absolutely. And I think one of the things that makes us a little bit different, maybe from a lot of investment newsletters, is whereas a lot of people will tell you just as a general principle to take profits on the way up, we are quite hands-on in sending out notifications saying we think right now is a good time to take profits on this company, and we'll tell you why. And it's usually for that same reason. I think that's in a sense a value added, but it's part of the game. I mean, buying and holding doesn't necessarily mean you're never trading. It simply means that you are keeping a particular company in your portfolio. You can leverage your own money to make more money by adopting this technique, and that's part of what we do at the Bauman Letter.
Okay, well, thank you so much once again.
It's a pleasure. It's a pleasure. And I promise my office will be finished painted next time, and the decorations will be back up. And don't forget, for those who are on my Friday videos, a lot of people have asked to see my guitars. I will be revealing them on Friday.
Just going to ask. I was just going to ask.
I'll be revealing them. There's some shockers in there. It's the great reveal.
Thank you. And for everyone listening, thank you. For more information about the Bauman Letter, please click on the link above or the link below. Ted, have a great weekend.
And you too, Angela. Take care.